Okay, we're going to begin. First of all, I want to thank everyone for attending. And we have people, I've looked at some of the names here, we have people pretty much from many different corners of the world, and I appreciate people that are just coming off of lunch in the States and people that it's very late over in the Far East. What we're going to talk about is principles of winning in these volatile times and the idea of accumulating wealth and compounding money. Before we start, there's a disclaimer that is imperative that we present, and I'll just leave it up on the screen for a minute that you guys can read it. But the basic idea is that past performance is not indicative of future performance, and this as well, the hypothetical performance have inherent limitations. And these are standard disclosures, but they're important. I don't want anyone to think this is very easy. Trading is very difficult. It's not a get-rich-quick. It's something I've been doing for the last 18 years. And I can tell you firsthand, you go through periods where you actually struggle. I'm going to say in this market, being paranoid is being realistic. You need to really believe that anything can happen. And then in tonight's talk, we're going to talk about 3 different aspects because I have 3 different types of, let's say, potential clients or people that are interested in learning more. There's stock market investors, there's forex traders, and there's also commodity traders and futures traders. But the basic premises that we're going to talk about are applicable to all markets. That's the concept, that you use robust ideas that can be used on any time frame in any market, because that's the only thing that can give you the possibility of succeeding over time and being consistent. And that's what we look to achieve, is being consistent. The most important issue that you really need to have a trading plan, and that might sound a little bit trite, have a trading plan. Like people say, have a business plan. But I'm going to ask a question, and if you guys can put up your hands, I think it would be very interesting. When you decide to buy a stock or whatever it is, let's say a currency, or if it's contracts in futures, do you know exactly how many you're going to buy or sell? Do you ever thought that out depending on your account size? You guys can put up your hands, or, okay, let's just see that, okay. Because a lot of times, people don't have that plan. They don't know what exactly to buy or to sell, exactly how many, whoops, trying to figure out how to get back to this. The fact is, they don't know what to buy, how much to buy, or where even to exit. So that's really the idea of having a trading plan. This trading plan is to let you know what you need to buy. And what does that really mean, what to buy or what to sell? What I teach is everything is based on strength, relative strength. And I'm going to show you shortly. I use MetaStock because it's very simple, it's very easy, where it identifies very quickly what is the strongest, what is the weakest, based on rate of change. And rate of change is a very simple concept. What is the price today compared to X periods ago? And I don't just use one period. I use several periods because I smooth them out, because otherwise you get whipped around. So that identifies what we should be looking at. But then the question comes down to, well, first of all, can I buy it or can I sell it depending on our risk, which is another major issue. Because what I also teach is you don't want to take more than a 1% risk on any one trade of your account. There are going to be, let's say, clients that think that that's not aggressive enough, and then there's going to be some that think that might be too aggressive. Because what it all boils down to is you need to trade your own personality, what you feel comfortable doing. My personal is I run 3 types of programs. One where I'm risking no more than 50 basis points. One I'm risking 75 basis points per trade. And one I'm risking 1.25. And then what happens is if I have a signal in one of those particular markets where I should be focusing on the ones that are the strongest with the anticipation that either strong or weak will continue to be strong or weak, then we can try to take a low-risk bet. And that's, then there's other filters, many other filters that, are involved also. But even after going through all those filters, any trade is 50-50. And what our goal is is to manage the risk and to stay in this game of trend following and compounding money, because the reality is 90% of people, or traders, even professional traders, blow up. They give up from either over leverage, or they don't have the, let's say, the psychological stamina or the fortitude to continue. Because you're going to have times you're going to have numerous trades in a row that don't work. Then the other issue is, as part of this trading plan, is you need to know exactly where the trade doesn't work, where you must exit with a loss. And you also have to have that mental fortitude to take that loss and keep your losses small. And you also need to follow trades and not get bored when they do work. There's trades that I'm in that have been in for months, and I'm not bored. I've taught students, and I've heard, you know what, I'm bored. I've been in this trade. I want to find the next one. That's wrong, because you never know how far a trade will run. I'm not doing this for excitement or entertainment. I'm doing this for actually two reasons: to compound money for my family and to have freedom. So let's jump to the next slide. And this is going to be the hard truth. If you really do not have an exact trading plan with every possible concept of anything ever happening, you should not be trading. Because basically you're going to be giving your money to people like me and possibly my students and to professional traders. Oops, I spelled fortitude wrong, but we can get over that. Because the other thing is about this trading plan. You need to have the mental stamina or the mental psychology to continue it. Because what's going to happen, and that's why I have the mentoring program. Let me tell you really the truth. There's many times I have numerous trades that don't work. When I say numerous, how do you feel when 4 trades in a row don't work, 5 trades in a row don't work? Well, I'm going to give you the reality. The majority of my trades don't work. And even watch my wording. The trades don't work. I don't care if they made money or I lost money. Trades either work or they don't work. It has nothing to do with me. But I have times, there have been times in my trading, because I've been doing this so long, and I've had 10 trades in a row that haven't worked. The majority of the people would quit and say, this doesn't work, you're wasting my time, this is garbage, blah, 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 blah. Well, let me tell you the reality. The reality is the concepts that I use are very simple, they're robust. I learned them through a gentleman who started in 1979, who's trading today, who took 200,000 to about 18 million. And you might that's really not that believable. I invite you to email me. There's an article in Marhedge about a gentleman who invested 300,000 with a trader, went through some rough drawdowns, and compounded that money also to 18 million. And it's from Marhedge. It's not from me. It has nothing to do with me. Another example. Donchian. Donchian himself lost all his money in the Great Depression. However, he had the mental fortitude to come back and continue trading. He started trading at the end of the Great Depression up until he was 90 years old. Almost 5 decades of trend following. So I'm going to say to you, you don't have to believe me. Just look at Richard Donchian. He did it for 50 years. There's other guys, and I can give you their names, that are professional money managers that have been doing it for decades. David Drews, who wrote the foreword of my book, The Bible of Trend Following, has been trading since 1981. And he made a statement. He said the difference between a successful trader and a non-successful trader is the ability to get up after being knocked down, and then being able to get up again after getting knocked down once again. It's going to happen. But the fact is, there's only 4 possibilities, everybody. You can have big losses, which we try our best to avoid. And I'm going to underline the word try, because all we're dealing in is uncertainty. And there can be gaps, and there can be limit moves up and limit moves down. Then you're going to have small losses, but you're fine. And then the other reality is you're going to have small profits. That's also fine. And the other reality is you're going to have very small number of trades that work beyond your wildest expectation that are big profits. Those are rare. Let's say like this, out of 100 trades you might do in a year or more, on average I do about 100, and depending if it's choppy or not so choppy, but I might have 3, 4, 5 that really work and make my year. That's what happened in 2010. I made my money pretty much in 4 markets that went just ballistic. It was silver, it was cotton, it was sugar. So let's continue. I want to strive that you have an exact plan. You don't have to have my plan. Make your own plan, but you need to have one. You really need to have one, or otherwise really don't even start. All you're going to do is throw money away. It's almost ironic. When I decided to make this webinar, and I said about being paranoid, because I had a conversation with a colleague who also, he's another example. His name is Harry. He's been trading since 1987, and what he does, he allocates to commodity trading advisors. And he made that statement, being paranoid is being realistic, and that's what I based it. But in today's blog that I posted on the website, trendfollowingmentor.com, I wrote about the VIX, and the VIX is showing us that there's a lot of complacency in the market, and that people aren't upset. Maybe they're bored with the market. Maybe they're bored with all the bad news coming out of Europe. I don't know the reason, but between the low volume and the VIX with the low readings, it's almost like a recipe for something negative to happen. But, you know, anything can happen as we're trend followers. We're open to any possibilities. I'm saying market disasters. Think about this. How many people really would believe that the NASDAQ would have fallen the way it did? How many people were calling for peak oil? Oil's running out. Well, I don't know if you've been to the gas station recently. Price of gas is falling. I guess they have all these, the fracking that's finding more gas too. I don't know if it's natural gas or other gas, but the fact is there's no peak oil. Guess what? Remember everyone was saying the dollar is going to become toilet paper? Well, let me say it like this. Maybe it will, maybe it won't. I don't know. Either way, if it does, I should make a lot of money with other commodities. But all these ideas that are in the news are wrong. That's why you need this plan. The Japanese stock market, that was at 39,000 in 1989. Today, we're below 10,000. All the professional money managers that lost money in Enron or WorldCom or Netflix, it's ridiculous. There were beautiful trends up and beautiful trends down. Profits could have been made. So the point here is that there will be these so-called disasters, but these disasters you can make money on if you're a trend follower. Anything can happen. Some of you have heard of ideas of Six Sigma events. A Six Sigma event is an outlier. Majority of people don't believe they're going to happen. They're not fun. They're, you know, it's like it's almost better to have our head in the sand. As a successful trend follower, you're going to make yourself available to benefit from these outliers. My biggest profits over all of these years have been during crises, not when the world is beautiful. And, you know, I want to give the disclaimer. The fact is, most of the time, nothing really happens. Going back to those 4 issues, big losses, small profits, big profits. Well, first of all, I limit my stops. I have 2 approaches to managing the risk, so I try my best to avoid these big losses, and for most part, I do. The other reality is the small losses and the small profits offset each other. And then when you have these outliers, like what I'm going to show you today, you make money. Not that you knew anything. You don't have to have a crystal ball because crystal balls don't work. You don't have to watch Bloomberg. You don't have to watch CNBC. All these people that have their opinions, guess what? They can be wrong. They do not know anything more than you. The smartest people I've ever met are the ones that humbly will say, like the guy from Winton, Adam Harding, who's managing in the excess of $20 billion. Someone asks him a question on any market, He says, I don't know. But this guy's made money for decades as a trend follower. He's more than a trend follower, though. But the fact is, you need to believe, this is the major difference, that anything can happen. And the difference is successful trend followers, they expect these things to happen. Just the fact is, we don't know when they're going to happen or in which markets. They're always going to happen. The goal of our discussion. I've used these ideas for the last 18 years. Mine's been a process. I've probably made every mistake possible when I started. But now when there's these volatile times, which we're in now, which people don't possibly underestimate, these are the times you can really make some serious money. And you're going to have a better understanding of what you need to know. As I said, we're going to talk about three markets. I have stock traders here. I have forex guys. I have guys that trade commodities. We're going to do each. And then we're going to talk about it. My goal is to educate you. My goal, I want to share with you the ability to be a long-term trader. Not long-term in the sense of time frame, that you're going to be trading for the rest of your life. Because really what this means is that you're going to be able to compound money. And it isn't just compounding money for yourselves. It's going to be compounding money for your children. I've taught my children since they've been 12 and 13 years old. They've sat next to me on the computer. They get it. They understand what it takes from the robust system idea, which is the least of it. The most important aspect of all of this is how to think as a successful trader, how to go through the adversity and get through all the inherent periods where we have drawdowns and periods that nothing happened. This is really the key. Because when you can compound money, let me just give you the idea of the power of compounding. If you compound, you don't have to hit these home runs that unfortunately many people think they have to hit these crazy numbers. If you can compound money on average at 15% over 10 years, you 4 times your money. Over 15 years, you 8 times your money. It becomes geometrically incredible. As Albert Einstein has said, that compounding money is one of the mathematical, what's the word I'm looking for? Not experiences, but gifts of the universe. And this is the idea, is to compound money, to have a methodology, to be consistent, to do the same thing over and over again and put on these trades. See what happens. Let the odds work over time. Avoid the big drawdowns. Stay out of big trouble. Here's my information. Again, I invite you to email me. I want you to read this, that a guy took $300,000 and ran it up to $18 million. He invested with Hawksbill. It's an article. I would love for you to read it. Actually, you can go to the website also, trendfollowingmentor.com, and you can contact me. One more thing before we jump over to meta stocks. I just wanted to make sure that 2 things. I have a book coming out with ebooks. In the book, a tremendous amount is delineated in there. What I teach is one-on-one to get you over the hump, to hear your personal issues, where you struggled, and help you get over them. And what I offer is there's a 40-page manual that you can have. It's free. You can download it from my blog. You join onto our mailing list, you get it. And my goal is to help you become a long-term successful trader. Okay, we're going to start with Metastock, and we're going to start with the stock market first. Hang on. That's a little bit tough to see here. Let me move this over. Basically like this. The stock market's a little bit different animal than a currency or, let's say, a commodity. The basic premise is like this. When I'm dealing in the stock market, I either want to know, can I be in the market or can I not be in the market? And if I can be in the market, I need to know what stocks I should be buying. So, and again, going back to our trading plan. So the first idea, and this is so simple, so basic, the idea is if I'm above a 200-day moving average, I have a green light. But again, anything can happen. I can have a green light like here, and this is a daily chart, and then it turns down again. I'm in, I'm out. There is no way you're ever going to avoid whipsaws. But one simple thing I do is you can look at a daily, and this is a daily chart with a 200-day moving average. But another simple way is I look at a weekly, which we're going to do. Hopefully this will open, because sometimes it takes a lot of bandwidth. And here we okay, and I'm going to change this to now a 40 period. Let's change it. And you can see we're whipping around here. The fact of the matter is, you are going to get whipped. Look at this period here. You're going to have a period here, a slight period here. Again, there is no way to avoid these. But let me move this here. If you saw this, you missed all of this ugly 2008 where people got wiped out. You were able to jump in here in 2009, which, if I remember correctly, was about March-ish when it got in. It had a beautiful run. Had a beautiful run here. You want to be in for the big moves. So my basic filter is saying, can I be in the market or can't be in the market? Very simple. Not rocket science, because that's the only thing that will hold up in the real world. Then what I do is, as I said, I determine what are the strongest markets and what are the weakest markets. And basically, here they go. So I have my level of interest. I know I should be looking at this chart, and 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 this one, and this one. These are the top stocks in all of the U.S. stock market. These are the ones that are moving the most. And at times when they really move, you make some unbelievable profits. But there's other rules. It isn't just, this is identifying what markets we should be trading. Like, let's just look at this one. Let's open the chart. Let's see what it looks like. Hang on. Hopefully it'll open, because it does take a lot of bandwidth with everything that we're doing here. Oh, here we go. Bingo. Oops. This is a weekly. Let's make it a daily. Well, we've had some, here we are. Depending on where you've gotten in, you had some big moves and have some big givebacks. And that's the other thing I want to say. Once you've identified what to be in, we have a trend breakout idea, and then we have a trend retracement idea that I teach. So you can have the ability to get into this trade. And then also, if you notice this green line right here, this is, and you can email me. It's an article that I wrote for a trading magazine back in 1998, which is a version, my version of a, basically it's a volatility-based average true range type of trailing stop. Here, let's get rid of that. We don't need this. Whoops. Okay. Because we don't have overly that much time, or I don't have that much time. I'm going to jump to the next chart. Volatility. Here, let's jump to corn. For those of you that are in the States, I don't have to tell you how hot it is. It's hot. Well, no one rings a bell when we're trading, ever. The only thing that happens is you get signals. You have trend breakouts. You want to buy the strongest, as I just showed you with this indicator right here. The trend mentor ranking, where you rank the different markets. And for whatever reason, actually for this reason, corn was one of the strongest markets. I had a breakout trade. You take the trade. This thing went ballistic. It didn't know the weather was going to change and get hot and parched and be a drought. I mean, you don't know. No one rings a bell. But when it does move, that's how you make money. You look at a basket of commodities. You do the same exact thing with a rate of change. You smooth it. And also I want to say it like this. I teach you exactly how I trade. I don't expect you to do exactly what I do. What I would anticipate is that you put it into your own personality to make it fit your own personality, because that's the only way you're going to follow it. And then to make sure you follow it, what we do is I say, great, we've had these one-on-one talks for however long it is you need, if it's 4 times, 5 times, 8 times, whatever it is, until you feel confident, and I feel confident that you get it. And then I say, okay, great. Let's see your next trade. Email me a chart like this. Tell me exactly the plan. Why did you get in? How many shares? How many contracts? The whole story from A to Z. We critique it together. And I will say, good job. You followed your plan. And then I'll also say, like, I had a client in Australia who tells me, well, I made enough money. I got bored. And I said, no, that's not the idea. Because you know what? This thing could have gone on and made money that you would never have expected. This could have been your big winner of the year. You just don't know. Let's jump to the next one. For the currency traders. Simple idea. Again, I'm showing you trades that are working. The fact is there's numerous trades that don't work. I want to reiterate that. But when you put on a trade, and let's say like this, you're running a $200,000 account, and you're risking 50 basis points. You're risking $1,000. You can be wrong, if you want to call it wrong, or I'll call it that the trade didn't work, many, many times. The more risk that you put on, which people don't think about, the less times you can be wrong or the trade doesn't work. If you're risking 1% on let's say a $200,000 account, you're risking $2,000. You have 100 times you can take a bite out of the apple, as I'd say. You do 2% risk, which I think is crazy, and you will blow up somewhere down the line. And yes, I'm going to be brutally honest with you, that will happen. Your greatest drawdown is always ahead of you, and our job as long-term traders is to manage the risk so we don't have a trade or a period of time that we quit. We want to be doing this for the rest of our lives and for our children. But if you're risking 2%, you're risking $4,000 a trade, and your account size is $200,000, you get 50 bites out of the apple. So I think you get the idea of what I'm talking about as far as risk per trade. There's other things you got to think about which I teach. It's also about sectors. You don't want to get too heavy in any sector. You also don't want to get over 20% of your portfolio when you have open trade equity of that, because your biggest drawdowns are going to be after your biggest runs up. That's what has happened to me. So I scale out a little bit. I say thank you, and I've done that. So talking about the euro dollar, not that you had all this news in Europe and it's like Greece and Spain and Portugal and you name it, all these issues. The fact is, I'm completely technical. No fundamentals, no opinions. The euro was one of the weakest of the currencies in which I looked at, which I don't look at a lot of currencies. I look at the majors because they're liquid. They have futures contracts. It's the safest idea as opposed to trying to go into let's say, a brokerage that doesn't have, let's say, exchange-traded contracts. So I do the majors, the Aussie, the New Zealand. I do the Euro, the Swiss, all the majors. Yen, dollar, Canadian. The euro dollar is one of the weakest. Put on a low-risk bet. Let's see what happens. That is the whole key, putting on low-risk bets. Going back to our slides, if the euro crashes, guess what? I'll make a lot of money. And you know what? And if it doesn't, who cares? I'm going to put on the next trade and let's see what happens. Because I already have the right mental attitude that I know that the majority of my trades aren't going to work, that I'm going to have a lot of small trades that make some small amount of money. I'm going to have a lot of trades that have small losses and they cancel each other. And I make myself available for when there will be some major move that no one rings a bell, and I'm going to catch it. I'm a fisherman. If the fish are biting, I'm going to catch. I mean, it sounds kind of, trite, but it is the reality. So it doesn't matter the time frame. It doesn't matter the market. Nothing. It's all the same. It's the same simple, robust ideas in which I teach. Those are pieces of the puzzle. People want those pieces of the puzzle. They think once they learn them, they're done. That's what I want to hear. I'm all excited. Well, when I teach, that's the last thing I teach. I work on my students until it's like, I would say, one guy told me, ad nauseum. And it's like I drilled in his head to make sure he really got the fact that any trade doesn't matter, to take low-risk bets, make himself available. Because people have all these preconceptions, and I go through a questionnaire and ask you questions to understand how you think so I can try to mold you to think correctly, because your success or your failure isn't going to be based on the system or on the methodology. It's only going to be based on how you think, and that you're going to have the mental fortitude to get through the inevitable periods that you're going to have drawdowns, and long periods you won't make money. And you can look at charts, and you will see what I'm talking, equity curves. And I'm going to give you this. The fact is, you can listen to all these websites, Get Rich Quick, with day trading and you name it what, forex trading and YouTube, get rich this. I'm going to tell you something. That's the quickest way to lose money. This has a propensity to work over a long period of time, decades. The other reality is, like the U.S. Marines, only a few can do this. And the reason only a few, very few people have had mentors. I've been mentoring my children so they get this, so they're independent. I'm opening myself up to make myself available to mentor you if you're really interested and if you really get it. So that's pretty much it. There isn't any rocket science in this webinar. It's down to earth. It's not sugarcoating anything. It's reality. And we can take some short questions, and then I need to get back to work. So if you have some questions, let me see if you guys have some questions, and I would love to answer them. Hold on. Mentor, can you write? Mentions an article. 1 second. Mark, I don't know how to make this bigger. Hang on 1 second. Mentions an article about his mentor. Can you write the reference here? I didn't get it well. Email me, and it's in Marhedge. It was an article, and it was about Hawksville, who was the money manager. And in that article, it talked about his the client. But you can email me, and I'll email it to you. Okay, let's see. Any other questions? Anybody else? Okay, by days, weeks, or do you mean periods of time? Good question. Bars. It's what suits you, Lloyd. The fact is like this. The methodology will work on if you want to do intraday, if you want to do daily. I wouldn't suggest weekly because your stops are going to be really, really, really far out there, and it's not realistic. I also would suggest dailies. It makes your life a lot easier. There are guys that I've taught that want to do intraday, and they think they're going to make more money, but the other reality is it takes a lot of time, and it takes emotional energy. When I put my trades on, because I live overseas, I don't live in the States, basically I put my trades on, I'm up at 5 o'clock in the morning. Takes me 2.5 hours to an hour. I'm done. There is nothing to think about. Every contingency has already been thought out as part of my plan. I'm done. And for the most part, I don't really even watch the market because I can't control it. It's not really, you could say it could be mental candy or interesting, but all it's going to do is either make me excited or get aggravated. So I've gotten to the point where I look at it the next morning and say, okay, great. This is what happened. This is what I need to be doing, and act appropriately. Okay, let me see. Hold on 1 second. Let me try to get rid of this one. Smooth rate of change. Oh, I apologize. I answered the wrong question. What I do is I look at a weekly, and I do it over several periods to smooth it. There is no magic answer. I look at 3 periods and smooth it. What size account if you're trading? Do you recommend a portfolio? Okay, great idea. First of all, what size of account? It depends on you and how much money you want to trade with. My first step I want to say is undertrade. If you want to trade 200,000, trade with 100,000. And commodities, you need a lot more money than stocks. You might even want to start with stocks because you can do it with a lot less money. It's a personal issue. It all boils down to risk per trade. You do not want to put on more than 1% risk. That's my opinion. Again, you need to trade your own opinion. You might even want to do less. I really wouldn't suggest doing more. Always, I look at a large basket of stocks. I look at a large basket of commodities. And what I want to do is I want to buy the strongest. If I can put on a low-risk trade, which is either being a trade breakout or a trend retracement, or I want to sell a market, which is the weakest, with those same 2 variables. And let the market tell me. My opinion means nothing. Let's go jump to the next one. I wonder if there's a way to make this thing bigger. Do you offer your parameters and indicators and money? Let me say this. There's no magic to the numbers I use. The magic is following them, but I give you everything I use. There's really nothing hidden back as far as the concept. The parameters, if you want to use a breakout, if it's a 20 and 10 or a 22 and 12, that's not going to make a difference. What's really going to make a difference is taking every trade, not second-guessing yourself and missing a trade, which I've seen many a times, and being consistent. And I give you the indicators also in whatchamacallit, in Metastock, because that's what we use. Okay, whoops. How long does mentoring program last? Well, it depends on you. I mean, what I do is I do one-on-one. I want to make sure you succeed. You know, I also want to be realistic because I trade for a living. What I do usually is we do one-on-ones. Most of the times that I'll have between an hour, hour and a half session. It could be 5 sessions, 6 sessions, 7 sessions, pretty much is what I've done in the past. And then what we do is, if you need to talk to me, we schedule a time, and then we talk. But what I want to see is, I want to see your trades. I want you to email me the trades and then tell me exactly the plan. I want to make sure, even before we start, you know, before you take one trade, I want to make sure you have an exact thought-out plan. And, you know, we talk about the plan. We diagnose the plan, and we talk about it. And then we actually critique it as it goes forward. Okay. I guess that's the number of questions from everybody. Well, anyway, I want to thank everyone for coming. And hopefully this was helpful. Oh, one more quick one. One second. The Psychology of Trading, as you rightly said, Andrew, is everything. Nicholas Darvin's book is fantastic. Yeah, Nicholas Darvis is good. I mean, put it this way. But that's the methodology. You can use his box theory. You can use Donchian. You can use, even if it's moving averages. That's not what's going to make you successful. What's really going to make you successful is how you think. And that is what I put the most amount of time on, to make sure that you think correctly. Let's see if there's any other quick questions, because I need to run also. Okay, everybody. I really appreciate everyone for coming, and hopefully I can, whoops. Anyway, I want to thank everyone again for coming, and if I can be of help for you, please let me know. Thank you very much.